Next tax season, employees earning tips will not have to pay taxes on them. This was one of the key victories in President Trump's big, beautiful bill in hopes of bringing relief to the working class.
There are some limitations, though, on this new bill, and our Aaliyah Demery is joining us live in studio now to explain. Good morning, Aaliyah.
Good morning, Jess and Kelsey. This new bill will allow employees to make a tax deduction from their gross income up to $25,000 in tips on their 2025 federal tax return. Now, there are a few factors to make someone eligible. The tax deduction is limited to voluntary cash tips that are received by an employee. According to the bill, those tips have to be reported to an employer for purposes of withholding payroll taxes. That employee must make under $165,000 threshold in 2025. I spoke with Andrea Jones, an assistant manager at Benedict's, a popular brunch spot in downtown Rochester. She says they pay out their tips for servers daily. With the new bill going into effect, she thinks there are pros and cons.
If you remove that tax, the business saves in the aspect that they're paying less taxes for that employee because they're not paying taxes on those tips at this point. That's a win. The downside is those employees now are going to make more than your management because they're not being taxed on those tips.
Jones also says this bill could oversaturate what businesses can receive tips. It is not yet clear what occupations can qualify under the new bill, but the Trump administration is expected to release a list within 90 days specifying that. To earn the deductions, all tips must be reported on official tax documents such as a W-2 or a 1099. Reporting live in studio, I'm Aaliyah Demery, KATTC News.